Well, good morning, everybody, and I certainly thank you for taking the time to certainly listen to me, but to learn more about the Mass Mutual and Prestige offer for all employees. I'm going to talk for a little while. Feel free to ask any questions, and I'm going to go through a quick PowerPoint describing some of the bullet points I'm going to touch on in the beginning. So Mass Mutual and Prestige together are offering all employees a unique opportunity to enhance their personal protection and retirement plan. A whole life insurance policy from Mass Mutual can help protect an individual's wealth, act as a supplemental retirement strategy that is very tax efficient, and generate and offer access to another savings vehicle. Now, the program offers what they call guaranteed issue and simplified issue, individually owned whole life insurance policies to all employees that grow cash value and guarantees. There is never any medical or financial underwriting at all. There are no tests, no medical exams, no check for pre-existing conditions, and no doctor's records at all. Simply by the first 10,000 up to 100,000 of life insurance is guaranteed no matter what possible issues you may have. No matter what bumps and bruises, you're the first 10,000, no matter what. Additional coverage, oh, there you are, excuse me. Additional coverage from 105,000 up to 250,000 every year requires answering a few simple questions and will have no bearing on the first 100,000. The first 100,000 is guaranteed. And the offer is repeatable annually. So every year on the policy anniversary, an individual can re-enroll for up to another 250,000. So conceivably, somebody after 4 years could have $1 million of whole life insurance without ever having to take a medical test or a medical exam. Now, the policies are whole life with cash value. So what does that exactly mean? So I'm going to give you an example. If there's a person who today bought a $100,000 policy and his premium contribution was $20, it would start with obviously $0 in the cash value and $100,000 of life insurance. Now, I'm calling it a premium contribution because it's a little different than other insurances that you may own, car insurance, vision, dental, medical. Those you pay your premiums and the insurance company keeps them, and you have the coverage and the peace of mind. These policies, you contribute to this financial asset, and those contributions grow inside of your cash value. And as you continue to contribute week after week, the money's going to grow in that cash value. So like I said, let's say this person bought a $100,000 policy and his weekly contribution was $20. So every week out of his paycheck, we would withdraw $20 and it would go into the cash value. And as time goes by, after a number of years, there may be $5,000 or $10,000 saved in that cash value now. And that would force that death benefit to go higher. Because as the cash value continues to grow year after year, we're going to see the death benefit also grow. And that cash value is the living benefit, and the insurance is the death benefit. And if you were in a jam and you needed $5,000 to do some home repair or go on a vacation or pay your bills or literally anything, and you didn't want to take money out of any of your marketable accounts, maybe the stocks are down and you don't want to withdraw out of there, or you don't want to pay a penalty, you can withdraw money from your cash value, tax-free, penalty-free, no 1099, no reported income. It's like going to the bank and pulling out $5,000. If that was the case, you would call me up or go online and we'll get you the $5,000 in, I don't know, 24 hours, 48 hours. And then the result of that would be the $10,000 in the cash value would go down to 5,000. The death benefit that had started at 100 and grown to 110 would go down to 105, and you'd have the $5,000 in your account. And then the next week we would contribute another 20, and on we would go with both values. You can pay back the 5,000 when you want to. You don't have to. It would just continuously be a loan against the policy, and many years from now, when the total death benefit had grown to something, if it had grown to 100 and whatever, it would be reduced by the 5,000 that you took out of it. Mass Mutual is a mutual company. So unlike stock companies, where they pay dividends to They're stockholders. We don't have any stockholders. We're mutually owned by our policyholders, Mass Mutual. So Mass Mutual will pay you, the policyholder, their annual dividend. Right now, the annual dividend is stated at 6%. So every year, as your cash value continues to grow from your contributions, you're going to get paid dividends based on the current dividend rate. Right now is 6%. I'm hoping, and I'm not an accountant or anything, and I'm not promising anything, but in light of recent activity and interest rates in our global economy or our US economy, as interest rates have gone higher in all sorts of areas, I'm imagining that next year our interest rate will be higher than 6%. No guarantees there. It's just something that I feel. So I'm going to go through a PowerPoint. Feel free to continuously send me some questions. And you can, sorry, 1 second. And you can continue to ask any questions. So anyway, again, welcome to our meeting today. This is our educational meeting. Enrollment began back on May 15th and runs through June 30th. So we have plenty of time to go through the enrollment process. We have another 3 or 4 weeks left. This is an important slide, not because it has my name on it, but because it has my contact information. If you have any questions, sometimes people are more comfortable one-on-one rather than speaking up in a crowd. Please feel free to give me a call. My phone number 516-408-5637. My email is right there, johnmanning@financialguide.com. And on the emails that you've been receiving about the program, it should have my calendar link, but if you want to use it, it's calendly.com/johnmanning-31. And if you click on that, you'll go right to my calendar and it'll schedule a 15-minute or a 30-minute Zoom call where the two of us can discuss more about the opportunities that lay in front of you, and I can go through the website with you and help you enroll if you wanted to. Here are a few facts about life insurance. As you would imagine, Mass Mutual studies these figures quite extensively. So nearly half of US households have no life insurance at all. That's kind of dangerous. 1 in 3 only have group life insurance, which is fine. Group life insurance is typically offered through your employee. It's different from Mass Mutual's whole life offer. It's a group policy, and if you leave that job or retire, those policies usually go away. In order to port those is very expensive, and usually that's not even an option. So group life insurance is something that's nice to have while you're working, but it's not a good plan for if you switch jobs or you retire. And again, nearly 1 in 3 say they need more life insurance, but have been hesitant to go through the process with medical exams and doctor's records and whatnot. And lastly, 60% of employees prefer to buy their health benefits and life insurance benefits through work. It's a lot easier than having to write a check every month or remembering to, take care of, putting another thing on your checklist. It comes out of your paycheck. You don't even think about it, and on you go. And you've got great coverage that's permanent and portable. These are 7 bullet points that I want to go through that describe some of the things I was talking about before. So for that example, I said before, for the $20 weekly contribution for the $100,000 policy, that's a guaranteed level premium. I love saying guaranteed. It'll never go higher. So if that person was 30 years old when he bought it, when he's 40 and when he's 50 and when he's 60, his guaranteed level premium is still $20 a week. It'll never go higher. And by the way, that death benefit will grow every year. So 10, 20, 30 years later, the $20 is guaranteed to remain level, but the death benefit will be higher. So the product that you're buying is getting bigger and bigger and bigger while your premium remains the same. And the second one is actually very important too. Guaranteed increases in your cash value. If you have $5,000 in net cash value, it's guaranteed to go higher the next year and can never go lower. It's like money in the bank. It cannot go lower. With the dividends and your contributions, the cash value is guaranteed to go higher every year. Even if you decide to stop paying it 1 year way down the line, your cash value is still going to go higher and higher. The death benefit is guaranteed from day one. In other words, if you bought the $100,000 policy, you don't have to pay it for a year or two to get up to the maximum amount. The entire death benefit, 100,000, is guaranteed right from the start. The application is simple. You got an email from Mass Mutual on behalf of Prestige. If you didn't get an email regarding this program, definitely send me a note and I'll make sure you get one forwarded to you. You click on the link and you put in your social security number and your date of birth, the year you were born, and it'll bring you to a simple application that's very intuitive. I talked about the dividend before. Again, Mass Mutual is dividend rate is 6%, and these policies are dividend eligible. So every year you'll receive the dividend from Mass Mutual based on the size of your policy and the cash value that's in there. The next one is pretty cool. There's a chronic care benefit on that, and a chronic care benefit is similar to a long-term care rider. So later in life, if you have trouble doing some of the basic, they call them activities of daily living. If you have trouble like getting around or making your dinner or something and you need some help, I mean, my mom was, 88, and we had someone in there driving her around and making her food and helping her out. And I know what that cost. You can access, if this is you can access half of the accrued death benefit, a lump sum, to pay for your chronic care issues. So if you bought that $100,000 policy, and then when you were 8 years old and it had grown to 200,000 in face value, or whatever it had grown to at that point, you could have half of that, one lump sum, to help pay for your doctor's bills or put in a ramp on the steps or whatever else you might need. It also has something called a waiver of premium rider. Neither of these come at any extra cost. They're included in the policy. And the waiver of premium rider states that during your lifetime, during your working years, if you are injured or sick to the point of disability and you cannot work any longer, Mass Mutual will pay your premium for you. And that goes for the rest of your life. So we wouldn't want, a disability that stops you from working to stop you from being able to afford your life insurance. And the last thing here, I mentioned before, is these policies are permanent and portable for your life. You own these. This is not a group policy. You own these. So if you live to 105, this policy is still with you. If you're supported or you're so lucky to live that long, this policy will be with you. And it's portable. So if you retire, or if you take another job, or if you move down to Florida, like so many people are doing, or whatever it is, and you leave the company with Prestige, you just switch it from a weekly payroll deduction to a monthly payment. So if it was $20 a week, we'd figure out what that monthly number would be. And then we would set it up with your checking or savings account, and on you go. And that would be no increase in premium, of course, no decrease in coverage, of course. Everything would be exactly the same. Here's a little bit of information on that chronic care endorsement. Chronic illness means that the insured requires continuous care for the remainder of their life. Again, being unable to perform without substantial assistance 2 of the 6 activities of daily living: walking, feeding, grooming, dressing, toileting, bathing, transferring, or any severe cognitive impairment. If you had any sort of issues with dementia or Alzheimer's, we would say, okay, you qualify for a chronic care. With a 6, okay, you qualify for chronic care. Oh, and if this happened when you were younger and then you got better, that's fine. You would, if the doctor said it was permanent and it turned out not to be permanent, we'd be thrilled, just like everybody else, that you're better. So Mass Mutual life insurance policies, the lowest offer is $10,000 worth of coverage in any $5,000 increment up to $250,000.
All right, can we mute Kenneth,
18.
please? It's very distracting.
Oh, yeah, please hit mute, everybody. Thank you. Policies are offered to all employees from age 18 through 75. Again, the minimum policy is $10,000, any $5,000 increment up to $250,000. Now, the first 100 was guaranteed, like I mentioned before, no matter what. And then up to $250,000, you just have to answer a couple of questions, and I'm going to go through that later. Also offered for everybody is dependent coverage. Dependents would be your spouse, your children, and your grandchildren. Now, like I said, employee issue ages are 18 to 75, but for spouses, it's 18 to 60. The reason for that is this is an employee benefit and this dependent coverage or ancillary, so there's a little restriction. So any employee up to age 75, you can get coverage. For spouses, it's 18 through 60. And for children and grandchildren, they have to be 2 weeks or up to 26 or in their 26th year. The last thing I'll say is the policy amount is 25,000, not greater or smaller. It's the only size offered. And the last thing I'll say is for the children or grandchildren, it's the issue age from 14 to 26. So it doesn't mean if you bought one for a kid who was 25, 6 years later, it would expire. That's not what that says. It says that on the day we enroll, the child has to be 26 years or younger, and then the policy will be there for that child's entire life. I hope that's clear. Again, if anybody can just hit mute, if you're making a little bit of noise, it'll be nice for everybody else. Thank you very much. Here are some examples by age. Many people overestimate the cost of whole life. I've heard that very many times. So this is some examples for a $50,000 policy.
Good morning.
For a 25-year-old, the cost per week for a $50,000 policy would be $7.39. That again would remain the same for the rest of that person's life. So when they were 50, it would still be $7.39 for their policy. If you started at age 45, it would be $18.81. And if you started at age 55, it would be $33. Again, $33 for the rest of your life. So 20 years later, still $33. And those numbers below are the guaranteed cash value accrued after 25 years. So for these purposes, this number, $9,786, is the guaranteed cash value accrued for this 25-year-old after 25 years. But my guess would be that it would be much more, because this is not including the dividends that we discussed before. MassMutual has paid a dividend every year for over 160 years. They've never missed a dividend. But this is saying, in case we miss them for the next 25 years, this is the guaranteed cash. So my guess would be it would be more like $19,786. And this one for the 45-year-old after 25 years, I would say be more like 40,000 or even more. And again, for the 55,000. So this is the guaranteed cash, not including dividends. So there's a look at a $50,000 policy. And again, for this 25-year-old, by the time he reaches retirement, it's going to be a lot more than $50,000 worth of insurance, because the cash value growth and the dividends are going to push that base value higher and higher. So I talked about the questions getting you over the first 100,000 guaranteed. So here are the three questions. We'll talk about them. The first question is, within the last 12 months, have you used tobacco or other nicotine containing products? Now, this is not a knockout question. It just wants to know if you're going to get the smoker rates or the non-smoker rates. There's still no tests or anything. They just want to know if you use tobacco or not. Second question is not a knockout question, but it may be. It's a qualifying question. Are you actively at work at your usual and customary location, maintaining your normal work schedule, performing all the duties of your occupation without limitation due to illness, injury, or sickness? So in other words, so long as you're not out on disability, you're actively at work. If you're out on disability, long-term or short-term, you can't enroll until you get off disability, and you can just enroll in the next enrollment. So you have to be actively at work. And this is the last question, is the big one. So it's during the last 2 years, normally for insurance policies, for some of these illnesses, there's a 5-year look back or even a 10-year look back. But for this group, there's only a 2-year look back. So during the last 2 years, have you sought treatment for, been treated for, been diagnosed by a member of the medical profession as having any of the following: cancer, heart attack, coronary artery valve disease, heart failure, cardiomyopathy, alcohol or drug abuse, diabetes for which the treatment is insulin? So if you're diabetic, but you're on metformin or some other treatment, you say, no, I do not have diabetes for which the treatment is insulin, it's something else. COPD, emphysema, or other chronic lung disease, stroke or TIAs, chronic kidney disease, kidney failure, Parkinson's, paralysis, cirrhosis of the liver, hepatitis, HIV. And I certainly hope you've had no experience with this in the last 2 years. And if you didn't, you answer no, and then you'll see on the application your options up to $250,000 insurance. If you did have some of this and you clicked yes, then you would see that the options stop at 100,000, the guaranteed amount. So how do we sign up? Everybody should be getting emails from Mass Mutual on behalf of Prestige with a link to the website.
I just like weird site operation.
It's an online enrollment. The website is very secure.
Q had some programs that was not advanced yesterday, but it's like it's not it.
Again, everybody, if you could kindly hit your mute button if you're chatting.
John, you can mute him too, by the way.
Okay,
If you click in the participants list, you should be able to just click on his mic and mute him.
okay. Anyway, it's online enrollment. It's very secure. And if you have any trouble with it, give me a call. I'll go back to the page with all my information there. Rather than call this 800 number, I'd rather you call me. This is what the website looks like. I'm sorry that these boxes are so small. On the left-hand side, you'll see this box right here. It says username. That would be your social security number. And right below that, it says password. That's the year you're born. So social security number 123551234, and then 1995. And then you'll see this button over here, and it says Mass Mutual at Work, highlighted, this blue hyperlink on the right side, and you click that, and off you go. Again, any trouble there, we'll go back to call me up or we'll set up a Zoom call. I don't know if anybody has any questions. I'm just going to go back to this page with my information. I know I spoke a little quickly. I apologize for that, but I wanted to get the information across to you and respect your time also. Does anybody have any questions about anything I've gone over so far today?
Will we get a copy of the PowerPoint?
I can send you a copy of the PowerPoint if you like, for sure.
That would be great.
Yeah, just I'm not sure exactly who asked that, so just send me an email and I'll respond to it with a copy.
Yep, I can do that.
All right. Anything else? So just to close up here, a whole life policy from Mass Mutual can help you 4 ways. It's got cash value. Obviously, it has death benefit. It has the chronic care rider, and it has the waiver of premium rider. So the cash value helps you when you're alive. If you need money in a pinch, the waiver of premium rider helps you if you get injured or disabled. We'll pay your premiums for you. The chronic care rider helps you if you get sick later in life. And certainly the death benefit is there. Life expectancy. We will be there to take care of your beneficiaries, your family, whoever's important to you. So I appreciate your attention today. Again, feel free to email me with any questions or set up a one-on-one on my calendar. And without further ado, I will say thank you and good day.